Walk us through your thesis. We've had the big run. We know you're bullish on tech. Materially, what are we going to see the difference in the second half?
I think now it's the second, third, fourth derivatives of AI playing out. Because it's not just about godfather of AI, Jensen, Nvidia, and of course Microsoft and Nadella. Now we're going to see on the consumer side, and where really Apple is going to be Cook's going to be the DJ at that consumer AI party. And then you're going to have software, Palantir, the Messi of AI front and center, ServiceNow, MongoDB. In my opinion, this is going to be a tech bull market that continues for the next few years. And even though it's summer, I think there's going to be a lot of bears over July 4th in their caves, in hibernation moves, with their spreadsheets and valuation, missing this tech bull market.
What I found so interesting about your note was that sort of Apple play, that the AI part of the consumer, like how me and Scarlett are going to be buying AI, has not yet at all been talked about in the same way. And that really, truly is an Apple with their massive install base.
Exactly. I mean, like, we thought being at Apple for WWDC, a historical moment. Because most consumers, 20 to 25% in the world, they're going to access AI through an Apple device. Now, someone will be like, okay, well, ChatGPT, what's that going to do for me? This is just the start, because you're going to have hundreds of apps that are going to be built on generative AI for Apple. That's just more money for them as services. And what I believe drives an AI-driven super cycle, starting with iPhone 16. You saw some of those numbers. We saw it in our checks in Asia. This is robust. So anyone betting against Apple is like betting against Tom Brady coming out of Michigan 2000 draft.
Recently, Wedbush Securities Dan Ives made quite a big statement for Nvidia, Microsoft, Apple, and the future of AI and tech in general. And these statements came contrary to many concerns that circulate the current AI market. This is because many analysts believe that the boom is over, and now is the time for these AI innovators to land on the ground after a long flight. Conversely, Ives believes that the ongoing AI revolution isn't coming to an end anytime soon, and these tech giants still have a huge potential to fulfill. He thinks that these huge tech companies, such as Nvidia, will continue thriving for a much longer period. In fact, he thinks they are just getting started. In today's video, we will go over two things: why Ives believes so, and what might be coming next for these tech giants. So, don't miss out. But first, if you want to keep up with the Magnificent Seven's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
But let's talk about why you continue to see and be the bullish Dan Ives that you have been for quite some time.
Look, and it speaks to our view going into the year. NASDAQ 20,000 is ultimately where I think we head. Tech stocks up another 15%, because even though this has been led by godfather of AI, Jensen, Nvidia, the multiplier for every dollar spent on Nvidia chip, $8 to $10 flowing through the rest of tech. Software, infrastructure, semis, and I think now consumer AI revolution with what's happening in Apple. In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m. And I think this tech market, bull market's going to continue.
How long does it take to get to 4 a.m. though?
I think in our opinion, it's a 2-year tech bull market, because I think the next phase, the second, third, fourth derivatives, it's about the use cases playing out. Of course, you see what's happening with Microsoft, the hyperscalers, Google, Amazon, but then next, it's going to be names like Palantir, MongoDB. I think what McDermott's doing at ServiceNow. You look at Oracle. If someone told you Dell was an AI name 6 months ago, they'd say there's no way. Look at it today. And I think it's a 1995 moment, not a 1999 moment. I think numbers go up significantly going into next year, and it speaks to our view where the bears will continue to yell in their caves about valuation with their spreadsheets, but I think this tech market continues to move higher.
Ives thinks that Nvidia's CEO, Jensen Huang, deserves the credit for this thriving AI market, as he believes that for every US dollar a company spends on an Nvidia chip, $8 to $10 are won in return, which flows into Nvidia's infrastructure, software, and semiconductors. Ives has even gone as far as saying that it is now 9 p.m. in the AI party that goes up to 4 a.m., basically saying that we are just getting started. He also added that this bull market is not slowing down anytime soon, before at least a couple of years. Ives said that this boom will even continue to go beyond the current well-known hyperscalers, as other companies are set to benefit soon, and he expects Palantir to be on the top of the list, followed by MongoDB. Another notable example Ives has mentioned was Dell, a company that has been heavily investing in artificial intelligence recently. The tech giant that has shipped more than $3 billion of AI servers over the past 3 quarters. On top of this, he expects the momentum to continue rising in the fiscal year of 2025, influenced by companies with a strong portfolio of AI-optimized solutions and an expanding partner base. But this growing business, despite the glamorous aura surrounding it at the moment, is still sparking many concerns. So, what are these concerns specifically, and what does Ives think about them? Let's find out. Hello everyone, and welcome back to Investocracy.
Let's go to Nvidia first. It was down about 3.5% earlier. Now it's only down 1%. But there is some commentary out there this morning.
Yeah, and I would say Nvidia's had a rough couple of sessions now as we've seen it pull back about 15% from its all-time high, which isn't too shabby, but it's definitely something that's concerned, I think, a lot of the overall bullish thesis on the market, because obviously Nvidia has so much momentum. But Morgan Stanley raising its price target to $144 a share from $116 with an overweight rating following positive data from trips, they said, to Taiwan as well as China. And as a result, the firm is raising their calendar 2025 estimates and thinks data points from 2 of those trips and U.S. checks now still remain robust. However, they did add that it's clear that we are at the tail end of the hopper cycle, and the frothiness and visibility is lower than it was, and given the enthusiasm they are hearing for Blackwell now is lower than it would have been. So, I mean, all in all, Street still very much loves this name. There's 58 analysts, there's 53 buys, 5 holds, no underperforms, no sells. I would respect an underperform at this point just to see some divergence from the trend, but analysts love this name, and there's a reason why. I mean, it's the second best performer in the S&P 500 this year so far, just behind Supermicro. But like in terms of the ads, I mean, like the value add we see on like a daily basis when Nvidia moves, it can add like literally hundreds of billions of dollars in market cap in a single session. We've seen that before.
Yeah, I mean, it's keeping the Nasdaq afloat right now as it repaired itself from down move. Well, I shouldn't frame it that way because it's still down, but it was down a good bit earlier, and now that it's come back, things have stabilized a bit.
The classic intraday recovery from Nvidia. I feel like where we open is never where we close.
Yeah.
This soaring success of the AI business currently reminds many analysts and economists of the 1995 internet-based companies and the consequent dot-com bubble bursting. This is a nightmare that should be avoided at all costs. But Ives does not really agree with the sparking concerns. He sees similarities between the two situations, but he doesn't think that the AI boom will end in a bubble bursting. Ives, thanks to his experience of having covered the tech industry in the late 90s, doesn't even consider the rapid current growth of the AI industry a bubble. Instead, he sees it as a mere evolution of the fourth industrial revolution. Furthermore, Ives cited Apple's most recent AI supercycle as a catalyst that will drive the company to unprecedented heights of success, expecting the company to have a renaissance of growth very soon. Additionally, he expects Nvidia to lead when it comes to enterprise AI, just like how he expects Apple to lead when it comes to consumer AI. So, are any of these stocks a good buy right now? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
For more on Apple, let's bring in Gene Munster of Deepwater Asset Management. Gene, great to have you with us as always. And so I'm wondering, it's been a while since we've spoken, a while since WWDC. And how are you thinking now about that upgrade cycle? Is it going to move the needle in terms of changing it from what it currently is, which I believe is 36 to 40 months, to something shorter? Are people going to want to upgrade?
I mean, definitely they're going to want to upgrade. I think the panel's accurately described what the next 1, 2, 3 years are going to look like. I'll put some numbers around that. Is that in the June quarter, the Street's looking for about 3% growth. If China actually does well, it might be 4%, so call that a percent upside. That's the near term. And then the growth goes to 4 or 5 and then 7% for calendar 25. So we have this kind of accelerating growth. And the piece that I can add, Melissa, related to how to think about this cycle is that I think ultimately the growth for next year is going to be 10% or greater. And ultimately, if that plays out, and I think Julie was talking about the margin impact, that's really important piece here. We're going to see record margins from Apple late next year. They're the only mega cap company that is scaling AI at an efficient rate in the near term. And you put those two together, I think you're going to see some nice 15-20% upside to Apple earnings. And so I want to just focus on that cycle piece, but I think there's a much bigger story for longer term investors, and that's really what's beyond the cycle.
Let's start with Nvidia. It's important to note that many Wall Street analysts are bullish on Nvidia. And for example, Beth Kendig at the IO Fund expects Nvidia to achieve a $10 trillion market capitalization by 2030. That forecast implies about 230% upside from its current market capitalization of $3 trillion. This is because the company's GPUs are the gold standard in rendering realistic computer graphics and accelerating complex data center workloads like AI applications. Nvidia also provides adjacent data center hardware, like CPUs and networking solutions, as well as subscription software and services that support graphics and AI workflows. Nvidia holds more than 95% market share in workstation graphics processors and more than 90% market share in data center GPUs. And looking ahead, Nvidia is unlikely to lose its leadership position anytime soon because it has a durable competitive advantage in its CUDA software. In other words, competitors not only need to overcome the superior performance of Nvidia hardware, but also the immense convenience afforded to developers by Nvidia software. Additionally, rapid innovation should keep the company ahead of its peers, as Nvidia's Blackwell GPUs offer 4 times faster AI training and 30 times faster AI inferencing as compared to the previous Hopper generation. So, it's very likely that Nvidia will continue to beat the S&P 500 over the next 3 to 5 years, so patient investors should consider buying the stock. On the other hand, Apple stock has been considered an investment gem for years, as the company outpaced the S&P 500 by 234% over the last 5 years. Even though many would consider the stock too expensive right now, it still has a lot of potential, especially from the demand that Apple could create from the integration of AI-based programs into its products. Most recently, the chatter around Apple has been its announcement of Apple Intelligence, its planned AI business, and potential partnership with Meta on generative AI. This could be exactly what Apple needs to gain the momentum seen by stocks like Nvidia. The iPhone maker also has the product lineup necessary to implement AI in a way that will appeal to its large consumer base. Apple's devices offer a lot of utility, so integrating AI into them offers more advantages and benefits to the consumers, and this is why investors should consider buying Apple shares. But what do you think about the future of AI? And are we in front of a bubble that is going to burst? Let us know your thoughts in the comment section. If you would like to know what companies like Nvidia, Apple, or Microsoft have been up to these past few days, go ahead and click on the next video on your screen. See you there.